So in this video, I'm going to try to go in deep on the differences of what kind of lenders are available, because that's something that's barely spoken about in the industry. And if you're a first-time home buyer or even a seasoned buyer, a lot of people surprisingly don't know the difference between working with a bank or working with a direct lender or working with a mortgage broker or even working with a private lender in some cases. So I'm going to try to touch on those. I might leave private lenders out because that's just something in a whole nother. They're in a whole different field. They're pretty much the resort that we go to if you can't get any loans from the first three that I was just describing. So in a nutshell, most people don't know the difference between the three, and they're kind of used synonymously between each other, and that's incorrect. So again, this video is for educational purposes and for edutainment purposes. And so, number one, your first option might be always to go to your big bank, right? And so when you go to a mortgage, to get a mortgage from a big bank, you're going to what's called a depository institution, right? And there's nothing wrong with getting a mortgage from them, but that's your first option. Your second option is going direct to a mortgage lender. Now, a mortgage lender, it's exactly what they do. They have their own warehouse lines of credits, and you're getting a mortgage directly through them. Everything is mostly done in-house, the pre-approval, the underwriting, all of that kind of good stuff. And then you have a mortgage broker, which is what I do. So I've actually been to all three. I've worked at a bank, I've worked with direct lenders, and now I'm a mortgage broker. Before we continue, what I do now as a mortgage broker, I feel it's a better fit because I can serve my clients a lot better than working at a big bank or working with a direct lender, but we'll get into that in just a few. So these are basically the main differences, or something that you should know when you're applying for a mortgage and who you're going to. Keep that in mind. I'm a mortgage broker now, but I've been to the other two. So when you're going to a depository institution, that's exactly what they are. This is a place where people open up checkings, savings accounts for personal or business. And I'm also grouping that in with credit union, right? So depository banks are credit unions, and your big banks, right? That you probably have a checking and saving with now. Now, the loan officers that work in these institutions, these depository institutions, they are most likely, 9 times out of 10, not licensed to lend. They don't go through the qualification process that a direct lender goes to or a mortgage broker. And what they're doing is they're using the authority of the bank itself to give loans. So in a nutshell, you're really not talking to someone who understands how the mortgage process works, because they never had to get licensed or anything of that nature. What they do is they get hired and they go through a training. They go through a training with the bank, and in that training, they're not going through any deep dives, so to speak, into what makes a mortgage work. The training is possibly something that you've experienced whenever you've gone through a training at any other corporation. It's very straightforward. What do you need? Get the clients in, and once they're in, ask them for specific documents. They don't really know how to read these documents. I'm sure there's a unicorn out there that does. But what they'll do is they'll get the application along with your documents and throw it in underwriting. If you look at the ratios of the closings that happens at big banks, the ratio to actually get into the closing table is very small, because of the simple fact that the due diligence needed in the beginning of the process is kind of waived because the loan officer itself isn't really licensed. They don't understand what's going on. All right, so that's the first thing with the bank. That's how we worked when I was working at a bank. I just knew what programs were available as far as conventional FHA, HELOCs, refinances. And if the client wanted to apply to it, then I'll say, hey, let's go take an application, send me these documents, and let's throw it in underwriting. And because of that, closing ratios are very small. So if you ever if you ever work with, let's say, a real estate agent, and you tell the real estate agent, because the first question they're going to ask you is, are you pre-approved? And if you say yes, first thing they're going to ask you is, Who did you get pre-approved with? And I can almost guarantee you the minute that you say the name of a big bank, they're going to ask you if you've spoken to a lender, because they understand the process of how it goes working with a big bank. The experience that they've had working with big banks is kind of what I just described to you. Everything sounds good in the beginning, but once the file gets to underwriting, these lenders don't, these mortgage bankers, we'll call them, don't really know how to reply to underwriters. They don't understand what they're submitting for the most part, generally speaking. And again, this all boils down to them not even being licensed themselves. All right, so that's your first option. Second option, we're going to talk direct lenders. That's when a direct lender, you're licensed, you're doing things professionally. There's nothing wrong with direct lenders at all. A direct lender is a mortgage professional who works within a specific company, and they're using the products given by their company. And so everything is done in-house, as I mentioned earlier in this video, right? You have processing in-house, underwriting in-house, and I was doing that for quite some time. The reason why I switched to being a broker is because I was limited as a lender, a direct lender. I was limited to the resources that I would have as a broker. So all lenders work differently. There's something called overlays, and different lenders have different overlays. So if I had a client who was doing everything by the book, everything was fine, there might be an overlay, or it might get to upper management. Upper management just might not like the file. Even if, let's say, FHA likes the file, the actual mortgage program that you're applying for likes the file, it might get to upper management and they might look at the file and say, this file looks like trouble, and they just won't approve it. In that case, you'd have to tell your client, you're going to have to go somewhere else. And the client is, who was dependent on you, now they're out again on their own looking for a lender who can close their loan. And that's the only downfall really of being a lender, is that you're limited to the products that you have with whatever company you're hanging your license at. Now, as a mortgage broker, what makes us different, and what makes me believe that brokers truly are better, is, let's use the last scenario I just had where a specific lender wouldn't close the loan, even if the loan was good as far as FHA is concerned. I'm able to take your file and just take it to another lender. Because as a mortgage broker, we partner with tons of different lenders that we like, lenders with the lowest rates, and we're able to shop your loans. And we're also going to find a lender that's most likely going to give you a yes when the file gets to underwriting. And so that's the main difference between all three of your options. You got your big banks, you have your direct lenders, and you have your brokers. Why I'm a broker is because I'm able to serve my clients at a higher level. The mortgage products that are available on the market, we have access to all of them. We're able to shop your rate. We don't have to get your credit pulled by multiple lenders or anything of that nature. We use one soft pull in the beginning, and it also gives the client the chance to actually get the numbers and the figures to see if buying a home might even be a good option. Most direct lenders do a hard pull in the beginning. Most lenders might make you pay for your credit report in the beginning, and that's a hard pull. In the very beginning portion of your mortgage application, I'm not sure if you even want a hard pull. You probably want to get a soft pull so that you can check your options to see which lenders are most likely going to give you a yes at the lowest possible interest rate, all without dinging your credit. And if the numbers and everything look good and you start searching for a home and you get under contract, then at that point, to me, I believe is the only good time to do a hard credit pull. And I have these options available as a mortgage broker. I didn't have that as a direct lender or working at a big bank. So I hope you guys find this information of value. It's the Mortgage King, so you know who said it. Any questions, contact me directly.